In the world of dividend investing, the allure of regular income is undeniable. And as investors seek to build stable and consistent cash flow, monthly paying dividend stocks have emerged as a popular option. These stocks offer a unique advantage, providing investors with a monthly paycheck from their investments. Now, one of the key advantages to monthly paying dividend stocks lies in their ability to provide greater financial stability by receiving dividends more consistently on a monthly basis. You see, most stocks across the market that do pay dividends pay them on a quarterly basis, which is every 3 months. And with monthly paying dividends, investors can better manage their cash flow, pay bills, and plan for both short-term and long-term financial goals. Because let's be real here, for dividend investors like myself that are looking to use their dividend income in the future to cover most of, if not all, their bills at some time down the road, bills come monthly. So even though a quarterly paid dividend stock that offers the same amount of cash flow as a monthly paid dividend stock, the monthly payments are going to be a little bit more convenient. Now in this video, we're going to go through 2 different monthly paying dividend stocks that will pay your bills forever. And what's awesome about these 2 different monthly paying dividend stocks is that as of right now, they are both, in my opinion, severely undervalued. Now stay tuned, because in this video, we're going to go through all that and more. Right after you please drop a like on this video and subscribe for more future content like this. Now the first monthly paying dividend stock that an investor could use to pay their bills forever is going to be one of my favorite, ticker symbol O, Realty Income Corporation. Now Realty Income got its start back in 1969 with a single investment in a Taco Bell. Today, the retail REIT owns thousands of properties across America that are leased to hundreds of tenants operating in dozens of industries. Retail properties account for the most of Realty Income's rental revenue, with industrial warehouses generating almost all the remainder. And all of Realty Income's properties are under long-term triple net lease agreements, which commercial real estate investors love. Now, triple net agreements basically means that the property owner does not pay for things like maintenance, utilities, and taxes. Instead, the tenants pay for it all. Now, one thing that's very impressive about Realty Income is the amount of uninterrupted dividend payments since first going public back in 1994, making Realty Income a dividend aristocrat. Now, overall, Realty Income has predictable cash flow, a strong balance sheet, and a disciplined approach to acquiring properties. Realty Income also offers an awesome monthly paid dividend, which we are going to go through here in a second, and some great portfolio diversification, which we are also going to take a look at. Now, if we come over here from the Realty Income website, you can see a lot that the REIT has to offer. It says portfolio snapshot over 12,400 commercial properties under long-term net lease agreements. Now, also, Realty Income has a 99% portfolio occupancy, over 1,259 different clients, and 84 separate industries. So a lot of people ask me all the time, what is my favorite dividend stock? And on top of that, what's my favorite monthly paying dividend stock? And this is without a doubt the easiest question to answer. It's simply Realty Income for multiple different reasons. But one of my favorite things about Realty Income is going to have to be the fact that the tenants within Realty Income's portfolio are very, very high quality. We're talking about companies like Walmart, Kroger, Costco, businesses like KFC, Dollar General. And one of the things that I like to try to stay away from when it comes to REITs is I always take a look and see, does this REIT have a large amount of office spaces? Now, I'm not saying that REITs that have office spaces are necessarily a bad thing, but for me personally, I'd much rather own REITs that are heavy into things like retail, industrial, or even website-based services. But Realty Income's top 10 industries are things like grocery stores making up over 10%, convenience stores, dollar stores, home improvement, restaurants, drugstores, restaurants, casual dining, health and fitness, automotive, and general merchandise. All these different industries are what I would like to call recession-proof industries, meaning that even if the market does take a turn for the worse, most likely, most of these different industries will be insulated and will hopefully, if not positively, continue to pay rent to Realty Income long into the future. Now, looking a little bit deeper into Realty Income's performance and why I think it might be a buying opportunity as of right now, I personally have been buying a lot of Realty Income under $60 throughout the beginning of this year. I bought a ton of shares at $58, $59 per share, which gives Realty Income a starting dividend yield of over 5%, which I love. But Realty Income still being down 3.95% year to date, it still is in the red, but not by all that much, as Realty Income is starting to recover with the rest of the market. But looking at Realty Income's stock performance historically speaking, Realty Income is up over 660% as far as the all-time max chart. And looking at some more facts about Realty Income as of right now, the starting dividend yield forward is 5.04%. The annual dividend payout is around $3.07 per share per year. The dividend frequency is of course monthly, which we love, and Realty Income has continued to raise their dividend pretty much since the start of this REIT and pretty much since they went public. Back in the day, Realty Income offered around 7, 8, 9 cents per share per month. now offering over 26 cents per share per month. So with all that being said, Realty Income, in my opinion, is definitely going to be one of my largest holdings long into the future, and will definitely be paying my bills during the time of retirement. Now, the next stock that investors could definitely use to pay their bills on a monthly basis from the monthly paying dividends is going to be Main Street Capital. Now, Main Street Capital was founded in Texas during the mid-1990s. Main Street Capital is a business development company, or a BDC. Now, BDCs primarily provide debt and equity capital to relatively small, highly levered companies that can't access traditional financing from banks. Now, Main Street Capital's success starts with its diversified investment portfolio, which consists of around 150 companies. Its largest single investment has historically represented less than 5% of the portfolio's income. So with Main Street Capital planting seeds and making many diversified bets across multiple different industries makes it much safer not having too much concentrated in one single sector. And although Main Street Capital might be a little bit more on the risky side for some more conservative investors, it's still definitely a stock to look into. Now, Main Street Capital has had a pretty decent year of performance, actually, being up 12.78% year to date. So Main Street Capital, in my opinion, might not be as great of an investment opportunity as of right now compared to something like Realty Income, but still a stock that I've been grabbing on red days. Main Street Capital offers a massive monthly dividend, which we're going to look at here in a second, but also has massive historical capital appreciation. Being up 220%, this monthly paying dividend stock isn't only going to pay your bills long into the future, but also could get you rich on top of it. Now, some more facts about Main Street Capital's dividend. The forward yield right now, even with the stock being up significantly year to date, is starting at 6.76%. The dividend frequency is monthly. And with a stock that has a pretty high starting dividend yield, you're not really going to see all that much dividend growth, at least not most of the time. But historically, at least, Main Street Capital has raised their dividend pretty consistently over the last 10 or so years. Now, the last thing I want to do is throw up Main Street Capital, the S&P 500, and Realty Income up on the total return chart and look at how they've performed on multiple different time frames just to get everyone on the same page and to see how they've done so far. So year to date, Main Street Capital's returned around 16.2%, SPY up around 18.87%, and Realty Income down the most at 2.32%. Over the last year, Main Street Capital's up 10.57%, SPY 20.83%, and Realty Income is down 6.82%. On the 3-year time frame, Main Street Capital is winning by far, up 70% total return. SPY is up 47.38%, and Realty Income's up 22.56%. And on the 5-year time frame, the biggest time frame that we have on this chart, Main Street's returned 61%, SPY 75%, and Realty Income 42%. So there we have it. Those are two different monthly paying dividend stocks that I have been buying like crazy over the past years, honestly. And at this point have stacked up a nice substantial position with both of them. But I want to hear from you guys down below when it comes to monthly paying dividend stocks. What is your favorite monthly paying dividend stock across the entire stock market? And would you or would you not invest into something like Realty Income and Main Street Capital? If you enjoyed this video, make sure to please drop a like down below and subscribe for more future content like this. Thanks for stopping by, and I'll see you in the next one.